Let's talk about profit first because it's making a comeback right now. And there's a reason for that. The economy, it's weird. Costs are up, cash is tight, and a lot of business owners are realizing something painful. Their business looks successful on paper, but their bank account tells a different story. Profit First promises to fix that. It promises to make your business permanently profitable by changing how money flows through your accounts. And when used correctly, it works. But when it's used wrong, it becomes a very confusing mess that creates more stress than it solves. So today, I'm going to give you a clear, simple version of Profit First. We're going to cover three things: what Profit First really is, how it works step by step, and the mistakes that cause people to screw it up. By the end of the video, you'll know exactly how to set it up, how to avoid the traps, and how to use it without turning your business into a spreadsheet experiment. So let's get into it. Profit First is not an accounting system, it's not a tax strategy, and it's not a magical formula that makes money appear out of nowhere. Profit First is a behavior design, and that's all it is. It changes how you interact with money so you stop making emotional decisions and start making controlled, predictive ones. The core idea is simple. Most owners run their business based on what they see in the bank. If the balance looks good, they spend. If the balance looks bad, they panic. That's called bank balance accounting. It's a problem because your bank balance doesn't tell you anything about future tax bills, payroll timing, cost of goods, upcoming purchases, or debt payments. Profit First doesn't try to stop you from looking at your bank balance. It gives you a setup that makes the bank balance a little more honest. It divides your money into separate accounts so that you can look at the bank and you can actually understand what's available and what's already spoken for. That's why it works. It gives you guardrails. Here are the core Profit First accounts explained in real world. No jargon, no fluff. Account number one, income. This is where all the money comes in. No spending from this account ever. It's a temporary holding tank. Account two, profit. This is the account that changes everything. Every time you get paid, you move a small percentage into a profit account. This is your reward for owning the business. And no, you're not allowed to borrow from this account when things get tight. That defeats the whole purpose. Account number three, the owner pay. This is what you personally take out of the business to live on. Too many owners mix the personal survival with business operations. This separates the two. Account four, tax. This account exists to prevent panic. When tax time arrives, you should already have the money. No more scrambling, no more borrowing, no more wondering why your accountant keeps giving you bad news. Account number five, operating expenses. This is what the business actually runs on. Payroll, rent, software, supplies, everything. Those five accounts create clarity. They make it impossible to pretend your operating expenses are stronger than they are. They expose overspending, and they force financial discipline. But setting up the accounts is easy. That's the easy part. The real magic comes from allocation. Profit First uses percentages to divide your income into five accounts. Every time money comes in, you immediately divide it based on those predetermined percentages. For example, profit, 5%. Owner pay, 35%. Tax, 15%. Operating expenses, 45%. These numbers are just an example. Your percentages will depend on your margins, of course, your industry, and the size of company that you have. But the habit is what matters. You receive money, you divide up the money. You run the business based on what's left in the operating account. This does two things. First, it guarantees profit. Even a small percentage compounds faster than you think. Second, it forces your business to live within its means because you're not allowed to steal from the profit or the tax to cover overspending. This is where most businesses get healthier. Not because revenue goes up, but because discipline goes up. Here's something most people won't tell you. You shouldn't jump straight into target percentages. Your business is used to spending about 90% of what it earns, and if you suddenly cut it back to 45% in operation expense, you'll blow yourself up. The right way is to transition it slowly. Start with tiny percentages. Even 1% for profit is better than zero. Once a quarter, increase the percentages by 1 or 2% until you reach your ideal distribution. The goal is consistency, not heroics. Let me give you a real example. A business owner once told me they started with a profit first that was 10%. They allocated that on day one. They were very proud. Then 2 months later, they were panicking because their operating expense account, it kept running dry. They hadn't adjusted their spending. They didn't change their pricing. They didn't fix their margins. They just put 10% into profit, hoping for the best. That's not profit first. That's self-inflicted pain. Don't shock your business. Train it. Let's go through the traps I see all the time, because this is where people screw up the system and blame the system instead of fixing their behavior. Mistake 1, using the accounts like a savings jar. Profit first accounts are not a piggy bank. They are purpose-driven. Borrowing from profit or tax because you've overspent an operation expense ruins the entire system. When you start robbing accounts, you're not doing the profit first anymore, you're doing panic first. Mistake number 2, not updating percentages. Your business evolves. As revenue grows, your percentages should shift. As margins change, your allocations should adjust. Profit first is not setting it and forgetting it. It's set it and monitor it. Mistake number 3, ignoring margins. If your cost of goods is too high, profit first won't save you. It will expose you. A company with bad margins doesn't need profit first, it needs a pricing strategy. Mistake number 4, running too many accounts. Some people get excited and start creating 10 or 12 accounts. No, keep it simple. 5 is plenty. You can add a 6th account for payroll if you want, but don't turn it into a spreadsheet zoo. Mistake 5, starting too aggressively. If you start with percentages that are too high for your operating account, it will starve. Then you panic. Then you steal from the profit account. Then you quit the system. Start small, increase intelligently. Mistake 6, not separating personal and business. Profit first only works if your business account is financially independent. If you're constantly mixing personal and business purchases, the system has no integrity. Profit first is amazing for service businesses, contractors, the trades in general, agencies, shops, retailers. It works because revenue is somewhat predictable and expenses have a certain pattern. But profit first is not perfect for extremely low margin businesses. Businesses that have huge swings in cash cycles, companies with seasonal spikes of 90 days or more, businesses with complex financial structures. In those cases, profit first can still help, but the percentages need to be more strategic, and the owner needs a stronger understanding of cash flow. The biggest benefit of profit first isn't profit, it's honesty. It forces the business owner to confront the truth and how much money they actually have. Not what the P&L says, not what your revenue says, it's what the bank says. Profit first gives you a habit. Every time money comes in, you allocate it. Every couple of weeks, you transfer. Every quarter, you take a profit first distribution. That rhythm creates stability. It also reduces stress because you stop making decisions in the dark. You aren't guessing whether you can afford something. The operating expense account tells you the truth. You aren't surprised by taxes. The tax account tells you the truth. And you aren't guilt-tripping yourself about paying yourself. The owner account tells you the truth. Profit first brings order to something most businesses feel ashamed to admit they're struggling with, money management. So here is a real takeaway. Profit first works. It works incredibly well, but it's not magic. It's discipline, it's structure, it's honesty. If you implement it the right way, you'll feel more in control of your business than ever before. If you take shortcuts though, you'll crash it. Start slow, set up the accounts, use small percentages, build the habit, then grow it. All right, that's it for now. If you want more straight talk without fluff, make sure you subscribe and check out all the other videos I have on this channel. I'll see you on the next one.